What are we doing? How's everybody doing? Morning, Ladder. Morning, Femba. Diamond. Forex Machinist is back. Morning. How's everybody doing? God, it seems like ages since I've been here. Having a day off. Right, where should we start today? Let's give it a couple of minutes, wait for a few more people to roll in. Big week this week on news. We got loads and loads of news this week. It's going to be a very difficult week to maneuver this week, I think. We got rate announcements coming out every day, and loads of other news as well. So it's going to be a very tricky week. I'm considering taking the rest of this month off, to be honest, at the moment, because the way this month's going, I just kind of want to wait until next month. But anyway, I'll go into that in a minute. Morning, Jeff. So Euro New Zealand, I'll start off covering Euro New Zealand because it's the bane of my life. Morning, Trevor. This thing's not stopping. This shift in the euro, although if you look at the other euro pairs for the minute, if you flick through the euros, they're all going up. But in varying rates of, speed, but you get the odd push and then a massive pullback. The Swissy is had a little push, now it's got destroyed, and then it's had a little push again. Euro pound has been doing well. Euro yen obviously has been doing well because of the yen. Euro US very choppy. So the euro is not massively strong. It's stronger than it was because of the rate announcement, but it's not a massively strong currency still at the moment. The problem with the one that I'm in, the Euro New Zealand, is the New Zealand dollar is on its backside. The New Zealand dollar is just collapsing. And you've got something which is strengthening against something which is collapsing at the same time, which causes the perfect storm. And since I got into this, we are 900 pips to the upside on a 140 ADR. It's just squeezing me to death. Just unfortunate timing on it. So this thing's off the charts. So I did a load of scaling out on it yesterday. I took an 8% loss. I've taken a couple of percent this morning on aggressive positions. Every aggressive position I've taken on the pair has failed. So basically, I'm just going to have to write it off. It's going to be probably a 13 to 15% loss month this month. Actually, it's not going to be a 13 to 15% loss month. It's going to be about 7 to 10. Unless this thing turns around in the next 24 hours. And we've got basically this resistance coming up, which is your daily resistance. That's 125 ADR today. So if we get there and this thing, there'll be some limit orders sitting there. This thing's going to trigger a bounce there. Whether or not we get that or we get that, I don't know. If we get that, fine. If we get that, I'm out. I'm just going to take a hit on it. It's just getting too deep, unfortunately. Morning, Rocky. Morning, Adrian. So every now and again, you get these squeezes which just don't stop, and you just get in at exactly the wrong time. I couldn't have timed my entry any worse, that initial entry there. It was the worst entry I could have got, unfortunately, so nothing you can do about it. But so we will see what happens with this one. But yeah, off the charts, this thing. So obviously, the last 2 months I've made 55% profit, which has been fantastic. This month, so far, I'm running on a 2% loss. So I'm down for the month. I took a 8% yesterday. I took a couple of percent there, taken 1% this morning. It's basically, this is not the positions that are costing me here. This is the aggressive drawdown control positions. And I'm getting in too many too fast. Here was a prime example. I had 4 aggressive drawdown control positions on here. As we started to pull back, I took 4 positions. We accumulated, got down to here, double bottom. I had the opportunity there to take around about 2.5% profit. And I thought, we'll hold on because Monday's a bank holiday. Unlikely to get any movement on Monday, and hopefully the move will start. What did it do yesterday? Took me out of every single one of them. So yeah, there's nothing wrong with my spacing. My spacing's fine, Rocky. Spacing is absolutely spot on. Yeah, I'm over half an ADR apart on my spacing. It's the aggressive drawdown control positions which are killing me. Normally, as you can see here, yeah, I got that one on. Yeah. Here, there's loads of aggressive drawdown control positions which are failing. Fail, fail, fail. In here, I had fail, fail, fail. Yeah, taken one this morning on this drop, failed. Taking another one now, that may well fail this morning. So basically, I've had around about 12 aggressive drawdown controls fail in a row. I have never, ever had that before. It's the first time I've had a pair that I just can't get an aggressive on it. I just cannot get an aggressive position on it. It's just pushing every day. So you have to take a loss on it, basically, unfortunately. But never mind. I'm in a fortunate position where I've had a massive couple of months. So this month, I suspect, and if it turns around, it could turn around today. This, if we get an ADR push to the downside today, I'm out. I'm flat and no problem whatsoever. And I'm just going to take whatever I end up on the month. I've got 2% down at the moment. It's not the end of the world. But if it pushes today and we get nearer 10%, I'm just going to take it on the chin and walk away. It's got me. Every now and again, you take a loss. But, taking one or two losses a year is not much of a problem, is it? Most people take sort of 5 to 10 losses a day. So in the grand scheme of things, 1 or 2 losses a year is not a problem, is it? You do have to take them. Aggressive spacing. There's no such thing as aggressive spacing, Rocky. There's not. Aggressive drawdown control you do when you see a move start. Aggressive drawdown control is scalping. And scalping, you basically get in and you add to your scalps. The problem with adding to scalps, as people will know if they're using any scalping strategy, is when you add to a scalp position, you're dragging your average down. And if that moves against you, you are risking 3 times as much on your stop loss. That's where aggressive goes wrong. But I normally wouldn't get in that aggressive. The trouble at the moment is it's in too deep. So I'm trying to get out faster, and that's what's killing it. So, hey ho. But we'll see what happens this morning. As I say, this is kind of the line in the sand up here. We should get a limit. We're going to have limit orders sitting there. So we're going to get a move off of that level. It'll either push through it and push back down, or we'll get a bounce straight off of it. It's whether or not that turns into a pullback, profit take move, or a reversal. That's the question. We haven't had a profit take on this move from there to there. Yeah, that is a pullback. It could be classed as a profit take, to be honest, actually. What's it? Just about 89 and a bit. But yeah, I mean, it's 960 pips move. It's 7 ADR move. 7 ADR move without blinking an eye. So got to deal with it. I'm not going to take any more loss on it. I'll just get out. So that's your New Zealand. So let's have a look at the news. Big week this week. Morning, Peter. Today we've got CPI for the CAD at 130. So big moves potentially on the Canadian dollar this afternoon. CPI is forecast to be negative, which is fine. But the CPI figures have been coming out all over the place recently. So the Canadian may well be along those sorts of lines. So we need to see what happens with that. If you've got any Canadian dollar on, and to a certain extent US dollar, be aware of that this afternoon at 1:30. It's an hour before market open. So we're on a plus point. I did scalp £900 yesterday out of a funded account. So that loss that I took yesterday is actually softened with this because obviously I've made $1,000 there. So swings and roundabouts, as they say. I've had a really good couple of days scalping, so I've actually negated that loss, but obviously that's nothing to do with that strategy. So Trevor, I hope Euro drops for you today. Yes, so do I. But we will see. And You can't, Rocky. I don't think you understand what aggressive drawdown control is. You can't space aggressive drawdown control. Aggressive drawdown control uses stop losses. You can't space them. You get in aggressive. You can't space it because it's not a position trade. An aggressive drawdown control is a scalp. Go and watch the Boocamp. It's a different type of entry. So CAD CPI today. Tomorrow, FOMC at 7 o'clock, and then we've got obviously the Fed fund rate at 7 o'clock released along with that, and then the press conference at 7:30. So today we've got Canadian dollar. Tomorrow we then move on to US. Tomorrow will quite possibly be a range bound day. FOMC day, quite often we get sideways movement because nothing's being positioned ahead of the rate announcement, because it's obviously the big one, 0.75, which is a big old hike. Then we've got the yen. So the yen CPI figures came out yesterday, or overnight, I think it was. Quick look. Yeah, this morning. CPI inflation for the yen was 0.1 above forecast. So that is kind of ever so slightly positive yen, but not really. A 0.1 increase on CPI is not, I don't think, enough to make any impact. So I've looked this morning, there's not been a massive movement on the yen this morning. There was a little bit, but not a lot. So we'll have a look at the yen pairs in a minute, but there's not a massive movement off of those CPI figures. So we've got the monetary policy statement and the Bank of Japan press conference. I am expecting them to come out aggressively and hawkish on this on Thursday with some kind of plan to dig themselves out of this hole, whether it be more lip service and the market just reacts to it, or whether it be something they can actually physically put into place. They need to do something. And they've said as much on Financial Juice. You watch Financial Juice, the Japanese are coming out all the time saying, we are watching this closely. This is not good for us. We're not happy about it, blah, 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 blah. No plans to do anything because there's not a lot they can do, but they're going to have to do something because the yen is absolutely collapsing. So that's a big one on Thursday morning. Following, it's difficult to tell. That's usually around about 3-4 o'clock in the morning, that sort of thing. Swiss franc rate we have on Thursday as well at 8:30, followed by the SNB press conference half an hour later. So the SNB, obviously the Swiss franc, we had that massive shock to the system on the Swiss franc. Probably better to look at another Swissy pair so you can see it clearer. So when the rates were announced, we had the big drop. When was the rate announcement? There, wasn't it? So rates were announced there, and obviously since then everything has completely collapsed against the Swissy. So that was a completely unexpected rate announcement. Yeah, we were expecting them to come out at their usual 0.75 negative, as they have done forever. Yeah, if you look at the rates on the Swissy, where we go on Swissy. Yeah, 0.75 negative. That's all. We just don't do anything but 0.75 negative. That's what the Swissy's been. They came out in June and went, actually, we're going to go 0.25. Nobody expected it. There was no mumblings about it. It was just a complete and absolute shock to the market. And obviously, there's so much that goes through the Swiss banking system. The market went into complete overdrive on it. And the Swiss franc powered up like I haven't seen it power up for ages. And since then, it's just crushed everything. It has settled down a lot against most other currencies. So we've had a lot of sideways movement after the initial shock. But as you can see, in the run-up to the rate announcement, we've had some more Swiss franc strength coming through. This morning, it looked like actually the Swiss franc was powering up this morning. Yes, not... Yeah, we've got a fair bit of Swiss franc strength, not across all currencies, but across a few. US dollars coming down a little bit as well. So that is the big one as well. So they're actually doing it. They're going positive. First time going positive for many, many, many years. So what that's going to do to the Swiss franc is very difficult at the moment, because we don't know how much of that is factored in. We weren't sure how much they were going to be increasing by, because there's no news coming out of the Swissy. The Swissy are very tight-lipped about everything. We don't get a lot of rumblings coming out as to, like with the FOMC, it's like we're factoring in a X percentage rate hike. We will be somewhere between X and Y and blah, blah, blah. We don't get it with the Swissy. It's just a case of it gets released, as we saw there. So big shocks potentially on Thursday with that one. We need to be very, very careful of that, because if you're in any Swiss franc pairs and this decides to move the market unexpectedly, it's not going to stop for a while. So just be careful with anything you got a Swissy on. My feelings are that we're factoring a lot of this in with the Swiss franc, but it's difficult to tell. It's difficult to tell with everything at the moment. Every economy is in such a state of turmoil. You can't really tell which way anything's going to go at the moment. But if that comes out as expected, I would look to see a little bit of strength probably in the Swiss franc. But how much of that is already factored in and been moved is very difficult to tell. So we got that on Thursday, big moves there. And obviously the press conference. The press conferences are where you tend to get the most movement happening, because what they will do is they will see this come out either as expected or not as expected, and then they will ask questions about what's coming next. That's what's more important, what's coming next. Because if they are saying, because of this, we're more likely to do this in the future, that gives us a monetary policy direction. That is where the institutions will then start to move. So this is where we tend to get the majority of the movement, which is why you see the press conference move the market, the rate and the statement not as much. Unless it comes out as ridiculously different, then obviously the market will move on it. So we've got that. Then at midday, we've got the delayed monetary policy statement and bank rate from the pound. This was due last week, but because of obviously the death of the Queen, that has moved back. So we are expecting a 0.75 increase there as well, which could send the pound either way. At the moment, it's down. Increasing the rates, in theory, should give us a little bit of a boost. But again, I think a lot of this is factored in by the market at the moment. So best you can hope for, I think, is a little bit of a trend pullback if we get it. But we will see. So it's very, very dangerous and very difficult to trade around these increases in rates, because if it comes out as unexpected and if the market hasn't factored in what it thought it was going to be, you're just going to get that movement start and not stop, like the Swiss franc. Yeah, so you look at things like the New Zealand dollar Swiss. When the rate announcement came out, if you're the wrong side of it, you're not getting out. So you've got to be very, very careful with these, which is why I'm considering taking the rest of this month off and just sitting there for the rest of the month and scalping, because scalping doesn't matter. I don't care what happens with the news. I'm scalping, I'm just not scalping around the news, but I can get in and out fast. So bank rates coming up for the pound on Thursday. Then Friday, we got a holiday in Japan. That when we get bank holidays in Japan, we tend to get this weird movement on the yen. Some days we get this massive movement off of the yen. We get like 200, 300 ADR moves because the yen is not being manipulated in the Asian session and the market takes complete advantage of it. So just be aware of that on Friday. You may get some serious yen movement, and it can be positive or negative for the yen. It's just a manipulation. So they'll take it whichever way they can make money out of it. But just be aware of that. It's not always, but sometimes it does. And then Fridays, we've got all the PMI figures being released across the board. So it's PMI day. We've got throughout the day PMI for the pound, for the euro, for the CAD, and for, sorry, not for the CAD, for the US dollar. And we've got retail sales for the CAD as well. So yeah, massive, massive week on news. Very, very, very difficult. It's an absolute minefield this week. It doesn't matter what you're in, you're going to be affected by it. If you're in the Canadian dollar, or the US dollar, or the yen, or the Swiss franc, or the pound, or the euro, you're going to get moved this week in one way or another. And don't forget, if we get one shock on any one of these rates, it will affect every single currency. Yeah. if this comes out at 3.5%, money will be withdrawn from the Swiss franc, from the pound, from the euro, from the yen, from the CAD, and it will be pumped into the US dollar. So these will all go one way, the US dollar will go the other. So you've just got, if they all come out as expected and it's all factored in, we may have just business as usual. You have no way of knowing though. So you are going to have a volatile week. So just be aware of all of this. Don't come in the Telegram group going, why is the US dollar suddenly pumped at 7:30 on Wednesday evening? If you don't know, you shouldn't be in the market, basically. Watch this. Very, 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 very important. So yeah, massive week for the news. So there's, with everything you see out there at the moment, you need to take it with a pinch of salt. Yeah, if something is massively extended on the RSI at the moment, ask yourself why. And if it's a Swiss franc pair, for example, what are you expecting on the Swiss franc rate announcement? Yes, it might be extended technically on the RSI, but if that rate comes out anything different than forecast, that has got absolutely nothing to do with anything. That market's just going to go. So just be very, very careful with your positioning and spacing, obviously. I would think yen has been going one way for so long. They'd use the opportunities, take some profits and move it the other way. Yeah, so when we get that holiday on Friday, we may well see a powering up of the yen. We've had it before. We've had, this market, everybody tries to predict what goes on with the currency markets, and it's impossible to do because there is no logic to it. You're trying to trade chaos. It is complete chaos. You've got so many factors that affect one of these instruments that you're trading. For a start, you've got two individual currencies which affect the direction. Then you've got 10 banks manipulating these in different directions. Then you've got fundamental news events that are deciding on whether there is a push or a pull today or not. And then you've got technical analysis where you have large orders placed, which automatically moves the thing in a direction, which doesn't mean that's the direction it's going in. It just means that there's a load of people entering at the same time, which makes it move. There's so many factors that make it go up and down. It is complete chaos. You cannot organize this. So it's just one of those things. When the Japanese have a holiday, you would expect something to be weakening in their currency, yeah, because they have got no way of defending that. But what tends to happen a lot of the time is it will power up ridiculously. They're on holiday, and you think, why would it power up? And it does happen. I've seen it happen. We've had massive yen strength when the Asian market's been closed, and you're like, well, how on earth is that happening? Doesn't matter. Someone somewhere behind the scenes is pulling some strings to make a couple of $1 million when they've got an opportunity. If you had a bloke lying there with his wallet hanging out of his pocket, and you could easily see there's $1,000 in it, and he was asleep, and you had an easy opportunity to pinch it, you probably would if you were an unscrupulous bank, wouldn't you? That's kind of what sort of thing that goes on. Hang on a minute. If we manipulate the market in this direction, we're going to make tons and tons of money. They can't do anything until Monday morning. Why not? You can't tell. We don't know what goes on under the scenes, under the hood most of the time, do we? But you just have to think there's a lot of that going on because there's no logical reason for something to do anything. But who said the market needed to be logical? It certainly isn't, is it? So big news week. You just got to be very, very careful this week. We've got loads and loads of manipulation ahead. So keep your eyes peeled, basically. We'll have a look at the ADRs. We had an ADR hit yesterday, Aussie New Zealand, which was really good. I was very tempted to take advantage of this yesterday, and I'm glad I didn't. Aussie New Zealand yesterday, we got a lovely big strong move to the upside on this. We actually managed to get I think it's 150 ADR out of it, and it hasn't stopped. This is a long which I've been looking for an opportunity to get in long on. I missed it down here. This is where we should have been getting in. I didn't. But yeah, very, very extended. We're pushing up again. Nice wicks at the moment. Looks like it wants to have a little bit of a pullback. But we've got this big, strong push, which potentially is a nice little scalp reversal. There's a couple of levels here. Well, actually, there's one level here, really. This level here. Potentially is where we could come back down and retest. So I kind of like the look of a short on that one temporarily, but it would be a short with a stop. Hope you're not implying bankers are unscrupulous. Of course not, Andy. No, didn't mean that last emoji. Oh, that's yeah, no, no. Of course they're not unscrupulous. But if you want to impress your boss and your job purely is to make money, what would you do? You know, take every opportunity. You would make money. If there's an opportunity there where you can screw over one bank because they can't do anything about it, would you screw them over? Yes. Why not? It's the competition. Don't forget, these banks, while there is a... and this is where these, you know, not monopolies and mergers, all the banking sector regulators come in. While there are legal precedents in place to say that you can or you cannot do certain things, you've got to get caught before these things happen. If you knew you were going to get a fine of $20 million if you did something naughty, but the opportunity was there to make $50 million, would you do it? Of course you would, because you're going to come out at the end of the day with 30 million, aren't you? And they are constantly getting their wrists slapped in the banks for insider, not so much insider trading, but banks talking to each other. You know, you scratch my back on this deal and I'll scratch your back on another one. So I need to get this up to, I need to get Aussie New Zealand up to 113,400. I need to buy a load. Can you sell me a load up to there? Yeah. And tell you what, when we get up there, I'll return the favour and we'll drop it back down. Yeah. I'll make money on the way up. You make money on the way down. Yeah. You scratch my back, I'll scratch yours. Yeah, no problem. I'm not allowed to do that. But do you not think there's different forums and little Telegram groups and things out there where that can be manipulated and done? Of course there is. And they've been caught doing it. There's all sorts of ways and means, but at the end of the day, you have to remember these big banks are also in competition with each other for customers. You know, they need those big hedge customers. They need the big corporates to be banking through them as well. So it swings and roundabouts. But at the end of the day, banks' jobs is to make money. So that's what they'll do. So you've got an opportunity there, Aussie New Zealand for a short. Potentially, you've had a reversal alert this morning. You had one here in Asia. They just did a liquidity run of the high there, came back down and have just retested at the moment. So there's a potential short opportunity there. Nice M pattern formation. But obviously you are massively counter trend. But lovely little scalp. Easily get an ADR out of that at some point if it's going to come down. You know, it's counter trend, so personally not for me. But if you want to take a short with a stop, you've got an entry there sort of somewhere around about 15 odd pips, and you've got a reward somewhere around about the 50 to 60 mark. Weeklies, Aussie New Zealand has hit, obviously. That's what I was looking at. So this obviously has hit its weekly range basically in 2 days. Big reversal opportunity there. You know, we got what's this? 1, 2, 3, 4, 5, 6, 7 4-hour candles up. No profit take move whatsoever off of that as yet, and obviously wicks to the upside. So it's looking like it's about to roll over up there. There's a lovely short opportunity. So Aussie New Zealand looks good for a short term. Obviously New Zealand dollar on its backside. The reason this has moved this morning is because of obviously the news. We've had the monetary policy meeting minutes for Australia overnight, which has obviously made that manipulation. So that's all we've got there. The 4 hours, Aussie New Zealand, again, massively extended to the upside. So yeah, really good mean reversion opportunity there. But as I say, you are counter trend. No reason why it can't. This is what we would normally expect, but don't be surprised if you see something like that as well. Yeah. So, we got extended there. Yeah, we just accumulated and pushed. Then you got your profit take. So pushed. We could accumulate and push for another leg. Maybe not. We don't know. But just be aware that it may not come down from here. We might just go into an accumulation, put in another leg. Euro CAD. Again, extended to the upside. A lot of these euros, as we can see, are extended to the upside because the euro's been on a bit of a run. Morning, Alan. But everything else has had a profit take move. Apart from, obviously, my friend Euro New Zealand. And Euro Oz as well, to a certain extent. We've had fairly decent pullbacks on that, which we haven't managed to get in on the New Zealand dollar. So Euro CAD is extended, but only just, and it's embedded at the moment. So we've got a fairly, it's not divergent, sorry. I was going to say, let's put in an M pattern. So it's just normal RSI extension, just embedded up there. But obviously we're just contracting at the moment. So typically you would expect that to break one way or the other at some point today, tomorrow. But which way it's going to go, don't know. At the moment, obviously, I'm looking for that because I need the euro to come down. But whether or not that's going to happen, another thing. Euro pound, very extended to the upside. We've got into an accumulation on this. Euro is running away with the pound at the moment because the pound is so weak. This is all going to change potentially this week, obviously, with the rates. So this week is just going to be utter chaos at some point. It's all going to go exploding in one direction or the other very, very quickly. So euro pound, very extended to the upside. We could get that pound strength. If we get that pound strength, if we get any kind of rate increase that we weren't expecting, we're going to get some serious moves off the pound. So that could all come flashing down very, very fast. We've got very, very strong divergence on this at the moment from here. Yeah. So got decent, strong bearish divergence on this, on that extension as well. So there seem to be squeezes more often lately. It's the first one I've been in for a while. I haven't had a squeeze for months. I'm not. The thing is with squeezes, you don't really notice a squeeze until you're in one, but you will see them everywhere. But yeah, you will always get them. You will always get a squeeze. There's always a squeeze going on somewhere. Most people call it a strong trend. We would call it a squeeze. Depends which way you're in on it. If you're in a strong trend in the right direction, you've got a lovely trend move. If you're in a wrong direction, you're being squeezed. So, like things like the US dollar yen, that's a beautiful trend. But if you're short on it, it's a hell of a squeeze, isn't it? Everything's got a different perspective depending on whether you're long or short. But yeah, things are moving, but the reason things are moving and trending so much at the moment is purely because of, or rather, trends are changing at the moment. It's because of all these rate announcements. Inflation figures are what drives all economy, basically. We haven't had a change in inflationary direction for a long time, and that is happening very, very quickly across multiple currencies at the moment. So it is a dangerous time for position trading when you've got things switching. This is what I keep saying. A trend is great. When you identify a trend is happening, quite often it's too late, and what happens is the trend reverses. So when you try and get in on that trend, you're getting in on the first leg of the reversal, and that's exactly what's happened to me on Euro New Zealand. Yeah, we pushed down. My entry was down here, so I was looking for this to be a continuation of the trend. It happened to be not just the reversal of the trend; it happened to be a squeeze reversal. So that it didn't just change trend direction; it started squeezing at the same time. But there's Nothing you can do about them when you spot them, which brings me nicely onto Euro New Zealand, which obviously is extended to the upside. But it's been extended. Obviously, that's where I got in. And we are basically in a wedge pattern at the moment. And this thing is just parabolic is the term. So we're on a parabolic move to the upside. We've got a nice H4. It's coming down nicely this morning. We've got a nice H4 reversal going on. So you can see my aggressive positions that I've got on. So this is how I enact aggressive drawdown control. Yeah. When you get your aggressive drawdown control position starting, after you've been pushed and squeezed so hard, when it actually gets going, it tends to come down very fast. So what happens is you get this big, fast drop. What that gives you the opportunity to do is witness a pullback without risk, and then a continuation where you can add into your position. Yeah. So I will be adding in on aggressive positions. So depending on where you are, you may need one aggressive position to get out. Sometimes you might need to take a couple of aggressive positions to get this average up. Yeah. Sometimes you might need 2 or 3 aggressive positions to get your average up. But if that pushes back up, you want to get out of these positions. So with these aggressive positions, I get them back to break even as soon as I can, or reduce the risk on them as soon as I can. The problem I've had with this is every time it's got a move started, that move is reversed very, very quickly. We start a move, get into multiple aggressive positions, accumulate, push back the other way. The problem with trading is every time you get a move that looks like it's done a liquidity run and goes back the other way, that's when you would take an aggressive position, because what you're expecting is some kind of M pattern reversal to start. And you don't know if it's going to be that type of M pattern, that type of M pattern, or that type of M pattern. Yeah. You will see the M patterns forming in multiple ways, and that gets you into position. Same as you would with any trade. We just had a reversal alert there on M15. Aggressive position. If that stops out there, yeah, and then comes down and does that, what have we got? One of those. Yeah. It's an M pattern reversal with a liquidity run. Yeah, but I'm getting into an aggressive position. I got into one way too early there because I'm getting super aggressive on this. Then taking one there, it could well stop me out and then go, in which case then I'm going to get in with that position. But you just don't know. And this is the thing. You can get to a point where at the end of a squeeze, what we're trying to do is what I say in the bootcamp, you cannot do. You can't time the market. This is where everybody fails. Whether you're trying to get into a trend, you're trying to mean revert, you're trying to get a breakout, timing the market is the most impossible thing to do because it's the only thing you have no control over. Unfortunately, when we've got into a squeeze, we have to try and time the market, because if we can't time the market to get in aggressively, we're never going to get out of the position unless you take a loss. But this one is just particularly, this is, as I say, on Friday, this is the most difficult squeeze I think I've ever traded. Every single pullback looks like it's going to start some kind of move, doesn't. And then it teases you into going, yes, finally, we're going to start making a new lower low. Structure's broken, and then it goes, nah. They're having real fun with this one. But anyway, not what we can do. But yeah, so H4 massively extended. We've got a beautiful candlestick forming at the moment. If we can form a shooting star here, the world and his wife is potentially going to start to enter this position, which will help massively drive this back down. Yeah, this is the problem. This is what we're getting. Every time we see any kind of, and from, since there, basically, since 13th of September, every time we've seen signs of weakness in this currency, all it's done is nothing but power up again. Weakness, power up, weakness, power up, weakness. What are we going to do? But on this entire move, these are not big enough drops, really, to be a profit take on this long-term move that we're seeing at the moment, on this long-term squeeze. It's just too orderly, but that's how trends work. orderly, but normally you would get a bigger pullback. We're getting such shallow pullbacks. If you measure every single one of these, you'll find that none of these are much more than 38% pullbacks, if that. Which is yes, a couple of times it tends to happen, but eventually you're going to get a drop. You're going to get a big move start. So fingers crossed it'll be this week. If this thing can sit here and move back down and accumulate for 2 days ahead of news, I'm hoping that one of the news events is going to do that. If the news events do that, I'm jumping ship completely. I scaled out yesterday just so you can see what I did yesterday, actually. So these are the scale outs I did yesterday, 19th. You see some of these are scale outs and some of these are aggressive drawdown control, but I'll show you the scale outs mainly. Those are the scale outs. So basically just taking partials off of these positions there. Yeah. So all of these were reduced down to 0.13s from 0.26s. As I said, I normally tend to scale out first rather than close entire positions because that brings my average up. But obviously we are reliant on that move down. And the move down that I need at the moment is, what's that, 1.5 ADR roughly, 1.25 ADR. I'm not asking for much. I'm just asking for an ADR drop. Come on. But anyway. I hate the aggressive entries. It was good at, if I was good at that, I wouldn't need position trading. Exactly. That is exactly right. You've hit the nail on the head there. If you were good at aggressive entries, you wouldn't need to position trade. Because all aggressive entries are trades. In the normal sense of the term, they are normal trades. They are just higher risk normal trades. And that's what we're doing. We're getting to the point where after a certain period of time, you know that the market has got to such a level of exhaustion, it has to rest. It has to take profit. And that is what we're trying to time. These are the trades. The aggressive drawdown control trades are the trades that everybody should be waiting for. And the ones where everyone goes, wow, every time it does that with 80% accuracy. The problem is you can't wait for that because you need to be in the market. You need to be pressing buttons. So what do? You take all the ones which aren't quite as good. So if you were to rate your trades on an A+ to a C-, yeah, if you took all of those and only those, you'd be a very, very profitable, successful trader. But what do? You take all the B+, you take the B-, and you take the occasional C-. When we're going to a range day for 2 days and you haven't found an opportunity, you're going to take the C- because what do you got? I've got to be trading. I'm a trader. That's my job. I've got to trade. Yeah. If you just waited for those, you'd be happy. Aggressive drawdown control positions are your A+. But as I've said many times, even the most successful traders in the world will have a losing run of A+ trades. And this is what the prop firms know. At some point, you're going to come a cropper. Regardless of how good you are at trading, you're going to come a cropper because the market is just going to take it. Nothing you can do. But yeah, that's what we're doing. Aggressive drawdown control positions, literally normal positions with a stop loss. Yeah, stop above the high. And we are trying to catch the high. Yeah. In this case, a stop hunt, end pattern reversal. So we're looking for a new low. We put in a pullback, new low, pullback, new low. Yeah, this is not going to happen today. And this is the problem. You've got to hold these aggressive positions that I'm getting into here. Yeah, if we get that, if we get an elevator shaft ADR hit today, thank you very much. Yeah, I'm out. I'm taking that money and I'm doing some drawdown control. But in reality, this is what is going to happen over the next 2 to 3 days. I've got to hold those aggressive drawdown control positions. So aggressive drawdown control positions, you've still got to hold them. They are still positions you're going to have to hold in the market for a few days, most of the time. Unless you get news, which is lovely. Best thing that can happen for us right now is to Russia to release, and I'm not saying this in a horrible way, but the best thing that can happen for us is for me personally right now is Russia to escalate the Ukraine by dropping some nerve agents or something in there, because that is going to make the euro tank. Something like that is what you will get that sort of move out of. Obviously, hopefully they would chuck nerve agents into somewhere that's got no people in it. Perfect scenario. But you need something to get that elevator shaft move. You need a fundamental event to make that happen. So that's what we're looking for in it. Right, so that's all your RSI extensions. There's nothing much there. Hourlies, there's a few off of where are we? Rain. There's a few off of the Aussie pairs on the hourlies. Aussie New Zealand, obviously. That's extended on the hourly and embedded. So we got up there yesterday, as you'd expect, on the ADR push. And then we've virtually put in 3/4 of an ADR this morning. So we've done about 225 ADR in 2 days. Massive push. Would expect some kind of profit take move, which seems to be happening now. But, we need to break these accumulations. And then we need to get down to here, and we need more sellers than buyers when they start buying up the dip. Euro New Zealand, starting to come down, extended on the hourly. Multiple extensions on the hourly. If you're scalping on the hourly, hourly RSI for scalps, you've had very nice little trades. That one you haven't. But you had some very nice little trades that you could have taken on this. Again, extended on the hourly. And we've got Pound New Zealand as well, which is the other one that I'm in, short. I've just taken third position on this one. Pound New Zealand is a little different. Obviously, I've taken a couple of positions out of this already, so I've taken some profit on this one already on these moves. Pound is weaker, obviously, at the moment. The New Zealand is still massively weak, as you can see, but the pound is weaker. We've got a fairly half-decent divergence forming, ever so slightly. It's not actually that good, is it? But again, news this week. It's all about the news. So I'm trying to, if I can, to try and get flat fairly quick. Euro New Zealand I can't do anything about. DAX I've got short on at the moment, which I'm not too worried about either at the minute. That's just starting to come down. It's taken another position on that this morning, so I'm pretty much at break even on that with the DAX. But the DAX is, the markets are not happy. They are likely to pull back, I think. Quite possibly they could just tank again as well. We've got lots, again, all this is going to be affected by the rate announcements this week. So we need to be aware of those. But there's your hourlies. So there's not that many on the hourlies, but pretty much the same sort of thing. So we'll have a whiz through all the pairs this morning as well. If we could find a way to solve the squeeze problem without the pain and loss of failed aggressive entries, then the system would be perfect. Yeah. Wouldn't that be perfect? I think what you're describing there, Diamond, is the Holy Grail. There's nothing wrong with with aggressive drawdown control. The problem is with people. If you look at my losses on Euro New Zealand and look at where they've come from, yeah, that one, that one, that one, and that one. Yeah, there's a total of just over $1,000 lost there on aggressive drawdown control positions. Yeah, that one, that one, that one, and that one is a total of $1,200 or something on aggressive drawdown control positions. This is me getting super aggressive, and the reason I'm getting super aggressive is because I'm frustrated. That's the bit that goes wrong, is the human bit. Yeah, that's why I've got that 3K loss in there. If you look at the scale outs total 5, 100, 9, 10, 11. Yeah, so I've scaled out of $1,100 on a 3K loss. So nearly $2,000 of that loss is me scalping aggressively to try and get myself out of this position. The normal position trading strategy has taken $1,000 loss on it. That's it. That's me being aggressive. That's why my month is now sitting at negative 2%, because I'm getting annoyed with it. And this is the psychology part. But there is a point you get to where you just have to say enough's enough. I've identified this thing is eating my profits away. I was at 6% on Friday. I'm now negative 2. So I've taken an 8% loss, basically, because I'm getting cross with Euro New Zealand. What I don't want to do, and what has happened to me in the past, is I just keep getting aggressive for the next 3 days. And what the Euro New Zealand keeps doing for the next 3 days is that turns into a 25% loss. That's not acceptable. That's not going to happen. But again, until you've done that, you don't know that you can't do that. You've got to do it. You've got to experience something like that. Or just have a more sensible, level head on you. But as I say, I'm lucky in the fact that I've got other strings to my bow. As I say, I scalped $1,000 out of the market yesterday, so I can soften this blow with scalping on the funded accounts. I've got $4,300 coming from my Forex funds. I've got $1,100 coming on Friday from E8, assuming they pay me. So, I've got, actually it's £1,100, $4,500 and £1,100, which is, it's not about £4,000. So I've got £4,000 coming in from scalping. So this is kind of why I'm being like this, because I can, because I have other ways to get money. Anyway, forget the Euro New Zealand. We'll see what happens. What will happen on that. There's nothing we can do about it. It is doing what it's going to do, which at the moment is being this. This is exactly what it's doing all the time. Every time it looks like we are pulling back, the thing just never gives up, does it? Just being a little moo at the minute. Right, let's run through all the pairs. Aussie dollar CAD. All right, so bear in mind, anything you get into this week, you are going to be affected. Yeah, so if you are in positions at the moment, you're in positions at the moment, you've got to manage those positions. What happens with these fundamentals is out of your control, and they will either go your way or they will go against you, and you have to deal with them either or. My advice would be, if you can, as soon as you can this week, get as flat as you can. And ahead of these news events, if you've got positions which are in profit, take them. So if you've got CAD, let's say you've got 3 positions on the CAD, one of them's in profit and 2 of them are in drawdown, take that profitable one off, because the worst case scenario is it goes against you, and you're gonna not just not be able to take that profit, it's going to turn into drawdown as well, and these 2 are going to go into drawdown. But the best case scenario is it goes your way and you go, oh, if I'd have left that on, I'd made even more money, but those 2 are going to go into profit. So you win and you win. Yeah, you just don't win quite as much on that one. But what would you rather be? Not winning quite as much on that one and making a profit, or would you rather be in drawdown on 3 positions? Yeah, so when you're coming up to these news events, regardless, take all profit off the table, just in case they are moved against you. And don't forget, just because the CAD CPI figures coming out does not mean that's not going to affect the US dollar. They're very close trade partners, and they do have an effect on each other. If these CPI figures come out ridiculously positive, let's say, for example, it comes out at 0.5, we're forecasting a drop. If it comes out at 0.5, CAD is going to go through the roof like a rocket. People are going to be pulling money out of all sorts of places to stick it into the Canadian dollar. Yeah, everything's going to move. So just be aware of that. Take profit off the table. So any trades that you are getting into, when we're looking at analysis now, you need to think, right, I've got Aussie dollar CAD. There's a fantastic opportunity on it. Do I want to get into one now? Probably best to wait until after that. After that, whatever. There's all sorts of things that can happen this week, but there's nothing specifically affecting the CAD. So just bear that in mind when we're looking at the pairs. If you see an opportunity now, the likelihood is before that news, you're going to do this. Nothing's going to happen. So you are going to get a reversal alert in all likelihood, because if the market is doing that, range bound, you're going to get reversals triggered in both directions. So just obviously bear in mind what we're looking at now. If CAD CPI figures come out one way or the other, this could go like that. Yeah. So, just be cautious this week. Very cautious. At the moment, obviously, we're in a downtrend. So I'm looking for opportunities to short this based on Canadian dollar should be strengthening, which it hasn't been as much as normal. And the Aussie's obviously been very, very weak. At the moment, we've got a new high put in. So we've had this structure shift, but since we had the reversal alert here, we haven't really gone anywhere. Yeah, so we've been sideways since sort of the first week of September at the moment on this one. Not really any direction on it. Overall, we're looking downtrend. We had this nice push up, we pulled back, but we're not doing anything. So obviously RSIs are very, very sideways on it at the minute. I'd be looking more for short opportunities than longs, but again, no real opportunity to get in on something that's moving sideways. So nothing much to look at there. Aussie dollar, Swiss franc powered up, and we've been pushed down this month. Aussie dollar has been a little bit weak, along with the New Zealand dollar, as we know. So obviously this move down, we've had a bullish bias on the Swiss franc. That was the opportunity to get in. I've got a feeling I took that one. I took some Swissy. I can't remember which one it was. But since then, nothing. Not interested in taking longs on this thing. Quite rightly so. We got extended there. Just gone into an accumulation. Dropped. Extended again. We're accumulating. Yeah. Bias is short on it. So these are dangerous counter trends. There's nothing wrong with taking them, but you need to be using a stop, obviously, if you're going to go counter trend on them. So still take these M15 reversal alerts when you see them. Yeah, if you get a nice reversal alert long, you can still take it. Just it's a normal trade. You're stopping out. It's a counter trend trade. Aussie dollar yen. So the yens, this is a good pullback, really good pullback. We didn't quite get extended. So there's two opportunities I was looking at. This one, the Aussie dollar and the New Zealand dollar yen on Friday. And the New Zealand dollar yen is the one that I like the most because of the RSI extension. But the Aussie is very, very, very close as well. So obviously we know the yen is on its backside at the moment. It has been for a while, and there's nothing that is being done by the Japanese, the Bank of Japan or the Japanese central government to get themselves out of this situation at the moment. We have got the press conference coming up this week. So there is a possibility that we may get something out of the yen this week that is positive and bullish, and the market might react positively to that, in which case then all these are going to come down. But right now, as we stand, there is nothing as such. So where we are here, it's a lovely opportunity for a long on Aussie yen. Reverse alert was yesterday. You also had one back down here on Friday. And then it went into obviously an accumulation. So it's looking good for long opportunities, Aussie yen. If you look at the New Zealand dollar yen, that was even better on Friday because we had the extension on the RSI here. Yeah, that's the bounce we were looking for. We then had this massive collapse. This was last week, wasn't it? Actually, not on Friday. We had this massive collapse on the New Zealand dollar, and New Zealand does push back down back into the 72. So again, when we look at things not able to hold at the 24, typically we get the reaction at the 72. We don't necessarily do that. What we do get is a reaction usually, and that reaction could well continue to the downside. But right now, in fact, you probably missed it this morning. Yeah, it just missed it. It's retesting at the moment. We're just starting to retest. We just had the reverse alert on M15. This looks like a lovely long opportunity. Very nicely extended down here. and just where I like it, basically in the 24.72 zone for a long. Obviously, I'm not taking anything New Zealand at the minute because I'm in Euro New Zealand. But nice looking opportunity for longs there. If you took the initial bounce off the 24 and didn't get out of it, obviously you'd be in second position down here, looking to get out anywhere here. So looks good. Still New Zealand dollar yen. So Aussie dollar yen, nice 24 bounce. This one's starting to push. We got that little bit of positive news off the Aussie this morning. Aussie New Zealand's gone through the roof. Beautiful tweezer tops on the 4 hour. M pattern reversal. This, I don't know if anybody took this one this morning. It was the first thing I looked at this morning. It does look good. If we break the Asian midline and we break the Asian lows, we should be able to get down to sort of 150 ADR. Got these nice big propulsion gaps down here to aim for. So risk reward, really good on a counter trend trade. So I like the look of that one. Well, I tend to take it. I've just got aggressive positions on New Zealand with Euro New Zealand. So yeah, Aussie New Zealand looks good. It's very nicely extended. It's counter trend, obviously. So, you know, just bear in mind you could get accumulation push. But short term, and there was an ADR hit on this yesterday. Well, so it looks good for short term short opportunity right now. On that, you're looking at a 26 to 50, so 2 to 1 risk reward on a short. Aussie US, this is a short at the moment. We've got the bounce at this level. Remember, we were looking at this area for a double bottom bounce. We got the initial bounce. We've got the reverse alert. We came back down. We've retested it, but we've still not gone anywhere. So looking like a nice potential W pattern back up into here. This obviously, we're in Tuesday. Tomorrow is FOMC. So it's not going to get up there for FOMC, is it? It could be taken there in FOMC. So again, this is a nice risk reward trade back up into there. But again, it's counter trend. We are short on this thing. So it really depends what happens with these rates. The positive rate, the rate announcement that we've got at 0.75% is a decent increase. And the market should be quite happy about that. So if we get that, I see some strength coming on the US dollar. But whether or not it's all been factored into the market already and it makes no difference, we could well just start to see pullbacks and profit takes on the moves that we've had on the US dollar. So again, you never know which way it's going to go. If we get something unexpected, obviously, then yeah. If we get a bigger than expected rate increase, we should see strength in the US dollar, and obviously this will tank. This double bottom, obviously, if that does break, will probably turn into resistance and then we'll drop further. But right now, that's a lovely reversal. But I wouldn't, don't look for anything more than an ADR out of it. Counter trend, if that, from here, just somewhere around there. I suspect you will start to see sellers stepping in. So, but right now, good counter trend opportunity on Aussie US. CAD Swiss, absolutely falling out of bed. Swiss franc really, really strong. We've got the Swiss franc rate increase coming, which should strengthen the Swiss franc potentially further. So I can't justify taking a long on this. I want short opportunities up here somewhere. If we're not getting the RSI extensions, somewhere in the 24.72 area, nice deep pullback, getting in short somewhere up there, but not taking shorts down there, and I'm not interested in long in it. The rest of the yens, we'll cover all the yens quickly. Obviously, we know the yen is a massive long at the moment, everything long against the yen. CAD yen, nice little entry down there. It hasn't really played out much at the moment. Canadian dollar is weaker than expected, but obviously everything is stronger than the yen at the moment. So you want to be looking for long opportunities on everything against the yen right now. Whether or not you want to be doing that on Thursday morning, couldn't tell you, can I? I'm not a mind reader. Don't know what's going to happen in the future. But right now, everything looks good. But if you are going to scale into a yen long now, and the Bank of Japan comes out and says, this is what we're going to do, this is what's going to happen to the yen, and this thing decides to power up, just going to have to get off the train, basically, because the yen, when it goes, which we know, it just goes. So just be careful with the yen pairs at the moment. My advice at the moment really would be, if you're going to get into new positions, and those new positions get yourself into profit, just cover them with a stop at break even. You're highly likely to get stopped out on them, but it's better to be stopped out on the yen powering up than it is to be in a 5 or 6 position squeeze middle of next week because the yen's just collapsed, or the yen's rather powered up and everything's collapsed against the yen. So again, we don't know what's going to happen. They may come out and say business as usual, we're stuffed. We identify that we're stuffed. We're thinking of something we can do about being stuffed, but we haven't got anything we can do about being stuffed at the moment. And that thing's going to go through the roof, one way or the other. But you know what drives the market. It's news, it's fundamentals. So we just need to see what happens with it on Thursday. Swiss yen, not giving us any opportunity to pull back. I just want it down here. I'd just love to get in this down here. I can't. Not given any opportunity. This is a lovely flag off of this move. So it hasn't broken yet. All depends on where you draw your flags and how you draw your flags. But however you draw them, whatever you use to line up your little lines, etc., etc. Excuse me. We're looking for a good strong move up, pull back, and then a long opportunity. But this resistance down here that finally broke, I think should get really tested at some point. So this is where I'm interested, down here, if we can get down there. But we can't get down there at the moment because there is not enough strength in the yen, and obviously the Swiss is powered up again. Same with all the others. Euro powering up against the yen. Pound powering up against the yen. New Zealand pound powering up against the yen. The pound go. Pound powering up against the yen. Obviously, any movement you get on pound strength with the yen being weak is going to be extended a lot more, obviously. So New Zealand dollar yen, again, shows you how weak the New Zealand dollar is. We're not actually making any real headway on that one, but lovely opportunity down there. And this New Zealand, don't forget, is going to power up at some point. It can't remain weak for that long. It is going to be linked to Australia as well. So when Australia starts to power up, you tend to find a little bit of strength coming through in New Zealand. But right now, that's in a really good spot for a long opportunity. And US dollar yen sideways. Again, FOMC, until FOMC is out the way, I don't think we're going to go anywhere but sideways on that one. So we'll be seeing where we go from there. This thing is just off the roof. We've had levels called, haven't we? We had 135 initially called by the Bank of Japan. We hit 135, screamed through it, came back and went. Whatever level they call, the US dollar yen just goes for it, and it hits it and it exceeds it. So, do not short that thing at the moment until we get something fundamental to tell you otherwise, even if it's extended. Look at the extension on this. We were at 90. What did we get to? 93 near as here. You got a lovely pullback, but you would have been looking at getting into this thing back here somewhere. Just not worth trying to short it. When we get up to these sorts of levels, 90 plus, you're pretty safe at 90 plus, regardless of whether something is squeezing or not. You're pretty safe at shorting a 90 plus extension. Very, very, very rare you will get to a 90 plus extension and you won't get an opportunity to get an exit on it if you were to get in there. But if you use that as your entry level, you're not going to get very many entries. And this is what I was saying about those A plus trades. Yeah. If you waited and only took 90 extensions, you'd make money virtually every trade. It'd be very difficult not to. But are you happy to wait for 2 to 3, maybe 4 opportunities a year? Most people haven't got that in them. But if you went in with a 5 or 10% risk 4 or 5 times a year, you're going to make 50 to 100% increase on your account. you're an investor really there, aren't you? You're not a trader. You're an investment scalper, if there is such a thing. So that's US dollar yen. So that's covered all the yens. Got up to there, Swiss yen. So euros, obviously the euros we know have strengthened up. The rate announcement, obviously, and this is what we say, rates make massive differences. When the rates change, it has a massive fundamental shift on a currency. The market, I didn't believe, would think that what they did with the euro was enough to warrant a move to the upside. And for most currencies, if you flick through the euro, you will see that it hasn't been. We've had a little bit of a push, yeah, but not much. Yeah, most of these euros, that rate was not enough. Things like the pound, where the pound is massively weak, the yen is massively weak, yes. But most other currencies where we've got normal sort of trading happening, the euro hasn't made any headway because the rate announcement wasn't enough to get on top of inflation. The market knows that. It wasn't impressed. But the thing we've had, obviously, with some of these currencies is absolute weakness, and the euro's managed to take advantage. So things like the euro odd, we've got a little bit more of a push than we were expecting. From a technical analysis perspective, we've got levels coming up which potentially we could find reversals at. But I think at any point this will turn around. It's just timing this thing is virtually impossible. So yes, every RSI extension on this is an opportunity to short the euro still, and it is on all currencies. It's just we were not expecting the Aussie and the New Zealand to be quite as weak. So these have pushed and squeezed a little bit more than expected. But we're in a lovely accumulation right now. They're building up for the next move. So potentially it could be to the downside. Obviously, from a news perspective this week, we're very light on euro. We've got the PMI figures coming out on Friday for euro, for everybody. But there's no other real news this week from the Eurozone. So this is going to get pushed and pulled around. The Aussies, we've got no rates on either. So we're going to get a lot of push and pull around on this thing, but it's going to be dependent, I think, on the Australian dollar and what happens with that. So really, the US rates, the pound rates, and the Canadian rates, it will depend on these three as to what people pull out of the euro and the odd. So if everybody goes, wow, we really need to get in the pound because they've done this with their rates, money will get moved out of other currencies to be used as leverage for this. So you don't know really which way it's going to go. It's going to be dependent on what happens with that, I think. But right now, we're in a lovely accumulation. So potentially, we've got a nice next leg starting. And if you measure the move, you have the old fib traders, you're really nicely in a pullback zone at the minute. Shallow, medium, deep. We're in just a normal pullback on a down move. It's just very protracted and taken an absolute age to happen. But that's where we are with it. So this euro is going to continue to be weak because the rates were not high enough, and that is what the market wants. That's what we're going to get. But it really is going to be dependent on the Aussies catching up and a bit of strength, which obviously we can't control. We've got nothing to control with rates either this week. Same with the euro CAD. Canadian dollar's been massively weak. Oil's been tanking. It's just not doing as well, but we've got the Canadian rates, the Canadian CPI inflation figures this afternoon. If they come out anything bigger than negative 0.1, we should see strength in the Canadian dollar, which means this would be a lovely short. So, where you are at the moment in this accumulation, if you want to trade the news, pending orders are the way forward. If it's going to go, when we say trading the news, I don't mean just trading that volatility around the news. Trading a speculative, yes, we're going to have better than expected results, which will result in something like that. Yeah. News trading is where they just muck about and manipulate. If there's no fundamental shift, yes, you could get something like that happen. But if we do have a move one way or the other, we could start that move happening. So, this kind of action starting in reverse if we get positive CAD results. If we get negative CAD results, obviously, go the other way. I probably wouldn't pick the euro to do it with, but so pending orders under the lows, if they trigger, we're looking for a good ADR move. So that would be your entry on it. But very nicely extended and embedded on the EuroCAD up there on the 4 hour. So nice looking short opportunity. But as I say, it's the Canadian dollar at the moment. This is the first time we've peaked our head above the parapet, above the 72 for a while on this. You know, look at last time it happened. Yeah. Nothing's changed. Euro is still in trouble. The only thing that's changed really is the Canadian dollar is a little bit weaker than normal. So that's why we're up here. Doesn't mean we're not going to come back down again. So I like that as a short. Euro Swiss. I expected the Swiss franc to power up this week on the rate announcement. And obviously Euro. It's a lovely 3-bar reversal on the 4 hour there. Look. Textbook. Absolutely textbook. Doesn't get any cleaner than that. If you were looking for the perfect example of a 3-bar reversal, that is it. Push, shooting star, drop. Doji, rather. Or shooting star, it doesn't matter if that was... Yeah. That is push, no, not interested. Equal pressure coming back the other way. Off we go. Lovely. So yeah, nice looking short opportunity there. Euro Swiss, not extended obviously, but yeah. But you know, again, we've got these levels being hit. There's all sorts of technicals, and this is where you can tie yourself up in knots. You know, fundamentals say one thing, technicals say another. You've got to pick what type of trader you are, what you're going to put the most faith in. At the end of the day, if you're position trading, it matters a lot less what you put your faith in, because when you get in, you've got an opportunity to get out, haven't you? But if you're trading with a stop, price action there is looking very, very good. Euro pound, again, it's kind of starting to come down this morning. These two are very weak currencies against each other. You get an awful lot of push and pull when you've got two weak currencies against each other. You get, we get range bound activity. We get news causing one thing, other news causing another thing. So, we've got a lot of push and pull on this. At the moment, the euro is stronger than the pound. Obviously, rate announcement on the pound could well correct that this week. And the only reason this is going up is because the pound is so unbelievably weak at the moment. If that changes this week, we're going to have some decent moves. Don't forget, we've had announcements in the UK that we're going to knock 5% off of inflation moving forward with our energy caps. So we've had positive news on the pound. The market hasn't reacted particularly positively to it because we're still going to be going somewhere between 15 to 17% into inflation, which is not good at all. But if that rate announcement comes out as expected or even better than expected, that is going to really strengthen the pound. So we should see some decent movement to the downside on this. But again, there is obviously the opposite that can happen off of news as well. News goes both ways. It could come out that we get as expected here. The market has factored all that in, and we are still weak. So again, you don't know what's going to happen until you see it happen. And obviously, if you're in a position, that's when you're going to make your money. If you want to get into a position, you need to have a preemptive. I think the pound will strengthen on that release, and have your pending order ready, and then take advantage of it. So you start your position on the news. Euro, yen, same as all the other yens. We covered that one. EU and New Zealand we know about. Okay, mucking about this morning. Still looking bullish. Look at these wicks. Bulls. That's so in control at the moment. The other thing that gets me about this thing is the bloody spread. Stops are so difficult to put into place. You lose more when you've got a massive spread like this. Now, it doesn't look like a lot of spread, but when you're talking large position, large lot sizes, it makes a big difference to your bottom line. Anyway, you're in New Zealand, yeah, still pushing, still massively extended. Not coming down. New Zealand dollar absolutely shot. Can't get any strength whatsoever off the New Zealand dollar. So hoping for negative figures on euro this week. PMI being negative will drop the euro. So let's see if we can get some negative figures off the euro. Obviously, that's all going to be happening after everything else. So, by the time we get to these figures, this lot will have happened and all hell will have broken loose. So quite what the PMIs will do, probably the market will be absolutely exhausted by then and do nothing. Euro US dollar. Shorts. Big short. The big short. And just looking for opportunities to get in short right now. Good one. Nice bounce at the 24. So anywhere here, if you need to scale into it, 2 or 3 positions, the next leg down. But yeah, looking good. But again, all reliant on FOMC. If the Feds turn around and go, as they have done in the past, really, really sorry, that soft landing is going to look more like a crash landing rather than a bumpy landing, that's going to happen. Yeah, US dollar massively tank. Indices will shoot up. We don't know. Again, ADR on pound New Zealand. Oh my God. Couldn't make it up, could you? New Zealand dollar. I've stupidly scaled in twice on New Zealand dollar. I'm not really helping myself this month, am I? No. Sometimes you just get to a point where you think, I need a reset. Pound US dollar. So yeah, big short on the pound US dollar. Still looking short on it. This thing's coming down. Sorry, it was Euro US dollar I was looking at, wasn't it? Euro US dollar. Still a short at the moment. I think more than likely we're going to get positivity on the US dollar off the back of FOMC. Highly likely that we're going to, this rate announcement will be good. If you look at the previous rate announcements, we went from 0.25, we put in a 0.75, then we put in a 0.5, then we put in an unexpected 0.75. Now we're putting in an expected 0.75. The US dollar has been sort of medium to strong off of 0.75 increases. The 0.5 increases they weren't happy with. Yeah, this one here in May. But the rest of them, when we've had a 0.75, the market's been a little bit more happy about this. So if we're coming out as expected, fantastic. I think that will be decent for the US dollar. If it comes out more than that, fantastic, even more still. Obviously, that will drive down indices as well, which is what we're expecting. So I think we're going to get some positivity off of the US dollar this week on FOMC. Therefore, you want to be looking for short opportunities. And this is likely the market starting to factor in the fact that that's going to happen. So shorts on euro US dollar. Pound odd. Pound's on a mission today. Seeing if there's anything... current account balance for the euro. Ouch. That's not good, is it? See if there's anything. Oh, here we go. Traders pricing 2 3/4 hikes by the end of the year. Where are we? September. Yeah, well, that's not unexpected, is it, really? But yeah, so net positive reaction to that this morning. You've got a double top coming at 169.70 on Euro New Zealand. Yeah. Yeah, so yeah, that's what I put in the Telegram group this morning. Yeah. That's what I said. That's my point. I don't think you were here at the beginning, Alan. That's my point of no return. If we break that and don't get a reaction off of it, I'm out on this. I'm wrong, not just temporarily wrong, wrong to the point where I'm not interested anymore. Like I'm not going to hold it anymore. You get to, people. The main dangers with this style of trading are over leveraging yourself and scaling in too fast. Those are the 2 things that kill most people. The other thing that I've seen kill people that have sent me messages in Telegram, and when I was running the paid live rooms, was people holding on forever. You can't hold on forever. If you get to the point where something is hemorrhaging cash, you need to stop hemorrhaging cash and take a loss. It's so rare. I do this once, twice a year, maybe. Yeah, you were late this morning. Slap on the wrist. Once or twice a year. I did it on oil, didn't I? You all saw me do that on oil. I took 4% loss on oil there. What happened? Yeah. So I can guarantee you I would put money on this. If we hit that level and we do that, and I get in with an aggressive position and it goes like that and I get out, I can guarantee you a week later you'll be down there. But for me, I'm not going to take that risk that is not going to happen. If that doesn't happen, I'm not going to give my broker 25% of my account. I'm going to take a loss of 10% and I'm going to turn around and go, yep, that's one of those months where the market teaches you a lesson and kicks you in the arse. Now let's get on with making 100% again. That's what you got to do. You got to take a loss. But that for me is the line, like you say, you've pointed out, that daily. We don't always get there to support and resistance levels, do we? You know, so look here, that one didn't get to it. That one didn't quite get to it. That line looks like we did, but we were just shy. That one there didn't get to it. Yeah. So there's no saying that we're going to get to this. We could turn here. Yeah. The whole point is with market structure, we're going to put in a lower high to come down and put in a lower low. That's what market structure is. So we could double top. We could put in a higher high. Don't know what's going to happen, but we are going to get a reaction there. This is a massive area of balance. We got a reaction there last time. We're going to get a reaction there again. It's whether or not that reaction forces a reversal or a deep pullback, or it forces a knock on the door, breakthrough and push. If that happens, I'm not going to hold on to this and hold on forever. You know, there's this mentality that some people have that, you know, with this style of trading, you can just hold on forever. At some point, it will come down. Yeah, it will do. But do you think everybody on the US dollar yen was thinking that when they got in short there? Do you think they're still in the game? No. After that, I'm out. If you weren't out, you were out up there and you're out permanently. Yeah, don't be permanently out. Words of wisdom from a man who's been there, done it. Don't do it. Pounds. So pound New Zealand, pound odds rather, pushing hard at the moment. Downtrend, obviously. Again, lovely opportunity for shorts. Had a nice short there. Had a nice short opportunity there. Didn't quite get there. Difficult one to take. That was a nice one. Obviously, where we are at the moment, we are ever so slightly pushing up. Yeah, this is the market factoring in rate increase. This is this weak Australian dollar. What's going to happen over the next month is going to be determined with the rate increase on Thursday. Don't know what it's going to be. So, you know, if you're going to look to get into short opportunities on a push, bear in mind that could happen. But, you know, historically, we're not in any better position now than we were here or here or here or here. The pound is still in a bad spot. Yeah, we have not seen anywhere near the maximum in inflation. That isn't good for a currency. Yeah, they can increase their interest rates, which will temporarily make this a little bit stronger. But at the end of the day, we are still in a downtrend. We're in a downturn. We're entering into a recession. Inflation is going through the roof. That's not changing. Yeah, we're doing some stuff to help it, but that doesn't mean that we're going to get stronger than the Australian dollar. So still looking for short opportunities. Not here. It's having a nice little push at the moment, but if we can get a push up, I'll be looking to short it. I'm short pound New Zealand, obviously, at the moment. Pound CAD, very, very sideways with the pound CAD. Again, you know, this, you know, doesn't take a rocket scientist to know which way you want to press the button, does it? we're accumulating at the moment. Weak Canadian dollar. The pound is beating it a little bit at the minute. Anywhere up there, I'm interested in shorts still. Pound Swiss, same thing. Swiss franc, should it get some strength on the Swiss franc, but get a reversal alert on the 4-hour chart here, showing strength. So the opposite back that way would be a lovely one to take. But pound Swiss, yeah, looking for short opportunities, not looking for longs down there. Pound yen I've covered, pound New Zealand I'm in already. So again, I've picked the wrong one again. This is the month for making stupid decisions, really, for me. Always comes from a, and I keep bringing myself back to that PDF, 5 steps to becoming constantly profitable. This is the one that kills everybody here. Step 4. Go and download this and read it if you haven't. Even experienced traders still do it. Walking on water. Yeah. When you've had a 50% quarter, you get cocky. When you get cocky, you get into trades when you think, yeah, that's brilliant. Everything's working at the moment. When I look at this and I look at its sister, I'm thinking, why on earth am I in the pound New Zealand and not in the pound odd? What an idiot. Why did I do that? Don't know, but I did because I'm just being stupid this month. So pound New Zealand short. I shouldn't be taking this because I'm already exposed Euro New Zealand short, but I took it, which is a silly thing to do. Pound odd was a much better opportunity. It still is. But I'm in it, so I've got to deal with it. So again, pound New Zealand, you see how much more spiky this is. It's a much nicer thing to trade. We get a lot more push and pull on it. But at the moment, it's just one way with the New Zealand dollar. And now we've got this pound strength starting to come through ahead of the rate announcement. It's pushing again. But this strength that we're seeing at the moment on the pound is likely the precursor to Thursday's rate announcement, and then they will reverse this and profit take this on Thursday. So I'm not particularly worried about this at the minute. But again, we're getting to the point where New Zealand dollar really needs to start waking up soon. Otherwise, I'm going to be worried about it. At the moment, it's only a couple of positions in it. Pound US dollar short. Same as Euro US dollar, don't long it, short it. Just trying to find a way to get in. Very hard. Just very, very hard to get in at the moment on Euro US dollar and the pound US dollar. So reversal alerts to the downside, you can pretty much take any one, and you're going to get one that's going to run. It's the same old thing, isn't it? Either position trade it on the reversal alerts and get out on the profit take, or use a stop on the reversal alerts and you're going to get stopped out 2 or 3 times. Just make sure you catch that 5 to 1 and you stay in it. If you don't stay in it, your risk reward stuffed. So, going to get these big moves. New Zealand's we know about. So this tells the tale of the New Zealand dollar at the minute. Just not able to get any kind of move. It's climbing up the stairs, falling down the elevator shaft every single time. Yeah, that's all we're getting. So waiting for basically that move that holds where we get a new high formed, that market structure break. This is a short anyway, New Zealand dollar CAD, obviously, but you can see how we got a weak Canadian dollar at the moment, and this thing's coming down like a steam train. So it's just losing the will to live, the New Zealand dollar at the moment. I'm not quite sure why. The Aussie dollar's holding up a lot better. You look at things like the Aussie dollar Swiss, it's still not good, obviously, but it is holding up better. The New Zealand dollar is just incredibly weak. I can't see any fundamentals that are pointing to this being weaker than it should be, but it is. So I have to just deal with this at the moment. It's causing problems. So at the minute, New Zealand dollar, I would steer clear of. It's a short across everything else. So just have to look at this and go, all right, well, I want to be shorting this, but when you pick it against any other currency, you want to make sure that that currency is also weak, because this thing's very, very weak at the moment. So New Zealand dollar, I'd steer clear of. I get the feeling it's going to power up at some point soon. They'll step in and they'll do something to move it. But with the New Zealand dollar, we have very little news on New Zealand dollar. We don't get, very much coming out of Aussie and New Zealand figures wise that makes any impact to the currencies. Very much driven by commodities, mining, exports, and oil and gas. It's just one of those things at the minute, which is coming down and causing problems. So we just got to hold on to these at the moment. But looking for short opportunities on all of the New Zealands. US dollar CAD long. Canadian dollar, very, very, very weak. US dollar getting these intermittent spurts, which is lovely. We had that nice fundamental shift, and it seems to be continuing. If the Fed step in this week and are bullish, we're not going to get back and sort this. I think it'd be very hard for them to come back down to these sorts of levels. So US dollar looking for longs across all these at the moment, and not so much US dollar Swiss, because with the Swiss is likely to power up as well. Obviously the yen, we know we're longing it, but US dollar CAD, still looking for long opportunities on it, but I'd like a pullback. Don't think we're going to get it, so I don't think we're going to get an opportunity to get into this one. But yeah, like it long, but we will see Wednesday tomorrow is going to give us a good indication. If the market reacts positively to FOMC and to the Fed fund rate, then I think we'll continue to squeeze to the upside on the US dollar, which again makes it very hard to get in. With some of these, you kind of want to become a breakout trader on them. But, 80% of breakouts fail. So, which is why breakout trading is an incredibly difficult strategy. But, taking breakouts, this is something I should backtest really, which I've never really backtested. Taking breakouts in line with trend only and position trading them may be another strategy that we can test. But anyway, longs on that one. Oil, we've not really made a lot of headway on oil. So we had that down day last week on Thursday, which we then went into accumulation. Bank holiday, V-shaped recovery. Looking like today we might make a new high. So that would mean we are potentially starting that recovery from the very point that I got out here. Still about getting out of the lows. So yeah, potentially we've got a good V-shaped recovery there. This is bank holiday trading, obviously, which is kind of whenever there's one major bank holiday in London or New York, you just tend to get weird movement, but it always tends to do something like this. So yeah, looking for longs at the moment on oil. Not that you'd have really taken that running and saying, well done, but I think the structure at the moment looks like we want to put in a new high. How high we're going to get, I don't know. We've got an awful lot of chop to run through now. So since we've started this big downward movement, every kind of accumulation in here, every balanced area, we've got to try and find a way to smash through those. So it'll be interesting to see what the barrel counts are this week, because we don't seem to have confluence with barrel counts at the moment. Whenever we're getting the barrels coming out. Where are we? Oil, where are you there? We're getting negative counts and negative movement. It's just weird. It's just not going in the normal direction. Normally what you see is if it's higher than expected stocks, that drives prices down. Lower than expected stocks drives prices up. We're just not getting that movement at the moment. The barrel counts have gone completely out of sync with the market for some reason, because we know why. It's just too much going on everywhere else at the moment with conflict and oil supplies, gas supplies, etc. So but we are very, very cheap, $80 a barrel. We're getting down to these points. Look at it on the daily chart. But, you know, we get into points. This is pre-COVID here, and pre-Ukraine. That's where the Ukraine war was. We're at that point where we should see some kind of positive movement. There is nothing. There's, you know, supply is being constricted. Demand is as normal and expected to increase. Yet we're having price come down. So this $85 a barrel is just, I think, the sweet spot at the moment where we're likely to get this bounce from. But equally, if it doesn't hold, $75 a barrel is certainly on the cards, isn't it? So difficult. But if you're still trading oil, I'm taking a break from oil after it started gold manipulationing to me. I like it here. This reverse alert here and the retest of that reverse alert is potentially a good precursor to that market structure shift. So looks good. Even the US is selling barrels out of their strategic reserves to drop the price. I know it's just I understand what the market is doing. I don't understand. I understand why they're doing it, but I don't understand why OPEC and the big oil producing nations aren't stepping in, because they've got their own problems and they need to generate revenue. So you would expect at least to see stabilization and accumulation, you know, for price to consolidate, not to be continuously dropping. And it's basically just been continuously, you know, dropping. The structure has just been down all the time. And, you know, we could be pushing back up for another leg down. But anyway, is what it is. Indices. Nice drop on the DAX this morning. Oh, I wish I'd have been scalping that. Meh. Yeah, so DAX basically, obviously we know everything is a short on all indices. The DAX, we had this big drop, and the same with all the indices, we had the big drop. Ooh. Yeah, fundamental news, not happy. Same as the US dollar. So obviously this is the inverse to the US dollar. The US dollar, we had that, and it looks like it's going up again. That is what we should be seeing on the indices. So everything else down. The gap fill has been done now this morning. The gap fill done. So I was looking basically for a push up into this area, some kind of retracement on that move before we started next leg down. So be careful with this. Not necessarily going to be a down day today. I think we may well want to push up and reverse this. But typically what we tend to see on the indices ahead of an FOMC is a rotation day. So today and tomorrow, we usually get a rotational day. So where we've pushed down this morning, we could well do that sort of movement today, because the market doesn't want to commit stocks either way ahead of a major rate announcement from the US. So you tend to see a little bit of rotation going in. Got some profit on that. So I'm tempted to get out of the DAX as well at the moment, just to get myself flat. But we'll see. I'm going to scalp that this afternoon. Well, I'm not going to scalp. I'm going to scalp the US indices this afternoon. Obviously, we've got the massive gap fill on the US indices as well. So I don't think necessarily we're going to get up there. This will be FOMC. If FOMC and the rate announcement comes out as negative, we're going to see a big push up into here. When we get up into there, we're going to see a lot of resistance up there, a lot of limit orders stepping in. The market is 100% committed short. They aren't going to change that even if we get a push up. The Feds have got to do something really crazy with the rates for this to actually get back bullish. It's not going to happen. We're still nowhere near our target. Yeah, a long way to go. But we'll see. So yeah, so shorts on indices this morning. Obviously, we've got a bit of a downward movement, but nothing dramatic at the moment. So we could just continue that move down, buying back out that propulsion gap. See if the sellers can hold that level there. See what happens. So it's a nice little short opportunity when we get back up there, if we get back up there. But yeah, that's the US indices. So still looking for shorts on those, but wary at the moment of a pullback. Very hard to read. Everything's hard to read this week. You know, when you got a news week like this, FOMC weeks are hard to read at the best of times. When you're surrounded by the pound, the franc, and the yen, and the Canadian dollar, either side of FOMC, it's just virtually impossible this week to forecast anything. Absolutely anything can happen this week. And then you finish it off with the euro, the pound, and the US dollar PMI figures, which could completely contradict everything that's happened there. You know, it's just this week's an absolute nightmare. Flip a coin. You've got just as much chance of knowing which way the market's going this week. Oops. ADR exceeded. What? Diamond, I got out of oil after the last adventure with good gain. I held the lows and have been sitting it out since. Yeah, good man. Yeah, as I say, that was, you know, I was in the same spot here. I was in 4% of drawdown here after taking a couple of aggressive positions which failed. But, you know, admittedly, after making 13% gains on it. So I made loads out of oil in that 2-month period. So it's not, you know, it did me very well. But I got out exactly when I thought it was going to bounce. But it was too much. It was too much pain for me at the time. And the only reason I got out of it really is because it's a new instrument. You know, like I said, I've been trading it for 2 months. I'm not used to the movement on it. And this just stank of gold to me. This is what gold does. And then it just doesn't stop. And you end up getting into huge pain. That's why I got out, because I was scared of it being gold. But it did. It did it. It pulled back. But not for me at the moment. The bigger fish to fry. Mainly Mr. Euro and Mr. New Zealand. So we're just holding at the moment. So looking for this high to hold today in Asia. But yeah, just be prepared today for a little bit of an accumulative day. We could well just be accumulating today. The other option, obviously, is they're going to be reaching for levels ahead of FOMC and stuff. So we'll see what happens. But Canadian dollar this afternoon. So if you've got any CAD on, be aware. We've got big CAD CPI this afternoon. What's the normal tolerance on this? 0.4, 0.1, 0.5, 0.1, 0.3, 0.2. So yeah, it's fairly volatile. Could go anyway. Normally it's 0.1, 0.2 on CPI figures. So, you know, they don't tend to get inflation massively wrong. When they do, though, it's a, you know, it's a biggie, as we saw with the US dollar. You know, when inflation comes out not as expected, you know, so be prepared. You know, CAD could do that. CAD could reverse this entire thing. Those CAD figures come out at positive 0.3 this morning or something, this afternoon. We'll be back down there later. Which is why I say, if you want to get into these, you know, if you like, you literally, the way to trade news isn't to scalp it, which is what most people try and do. They wait for that spike and then they wait for the end of the spike and they try and catch the fade, or they wait for the fade and they try and catch the drop. You know, the way to do it is to go, right, do I think that's going to be positive or negative? If it's positive, US dollar CAD's coming down. If it's negative, US dollar CAD's going up. What do I think it's going to be? I think it's going to be positive. So I'll stick a pending order under that low. And if I'm right, it's going to do that. If I'm wrong, it's going to do that. And I don't get in. That's the way to trade the news. Not wait for the news to happen and then try and muck about while that's doing that with a spread like that. That's suicide. But saying that, remember my CAD Swiss, my Swiss yen? It's not on there anymore, is it? Oh, yes, it is there, look. It's still there haunting me. Yeah, that's exactly what I did there. Look, I put a pending order under those lows, expecting that to happen. What did it do? Took my order in. That was my stop loss. That is, I can't even see it. It's off the bloody chart. That is where I actually got filled with a $500 loss. Just be careful when news trading. It's not all it's cracked up to be. Did exactly what I thought it was going to do at the end of the day, but too late. Too late. Right, that's me done for the day. Well, not done for the day. Obviously, I'm managing Euro New Zealand. I'll post what I'm going to do with Euro New Zealand as it unfolds today. As I say, there's lots of opportunities out there to get in, but everything you get into this week, just be so careful with it, with news. So I've got two aggressives on. Again, this is going to hurt. See what I mean? This is where you are. I'm talking another 0.8% there. If this pushes today, it's another 0.8% loss. You know, this, you have to say to yourself, there's a point where you just go, nah, it's not working. This thing is fundamentally shot. The fundamentals have shifted this to such an extent that I just want to get out of it. So if that does that today, and we get up to this level. So we're looking for 125 ADR push today to get there. So if it can make that 125 ADR, that's where I'm going to make my last stand, and that's where I'm out. So we'll see what happens if we get up there. I'm hoping, obviously, we don't get up there. We just put a lovely bearish engulfing in and we go collapsing. But, you know, that's what that looked like it was doing this morning. We looked like we were getting some decent downward price action this morning, and it went new. Interested. We'll see. Okay, if you've got anything you need, come in the Telegram group. I shall be mainly scalping today on the indices. Today, I'm looking today for a rotation day. So I will be watching these. These, I've just missed it basically, but just starting to rotate now. So looking for some kind of rotation today on the indices, or looking for some kind of rotation drop. I'll wait and see what price action does and let price action lead the way, basically. You off, Trevor? Fingers and toes crossed? Yeah, fingers and toes crossed. Always got fingers and toes crossed. ADR on Aussie New Zealand. Average monthly range, sorry, on Aussie New Zealand. Big push for that. Many things can play out from this move here. You know, could do that, could do that. We'll see. But a very big extension on Aussie New Zealand now. Monthly range hit. So yeah, so I'll leave you there, and if you need anything, come in the Telegram group. I will be in there. I'll be back tomorrow morning, 7:50. Canadian dollar this afternoon, 1:30. Be aware of that. We've got Lagarde speaking later, but I wouldn't worry too much about that. So yeah, that's the main thing today. We've got to bear in mind CPI figures there may shift things around, but other than that, we're all waiting for tomorrow to see what the Fed does with that rate. So we're either going to accumulate, or we're going to be reaching for levels to take out liquidity ahead of news. So anything can happen today, especially after a bank holiday. yesterday, we could have all sorts of weird and wonderful things happening. So at the moment, it looks like it's literally more New Zealand dollar weakness coming in across the board, and nothing else really looks like it's doing an awful lot at the moment. Bit of US dollar strength this morning, but on that, yeah. Okay, have a good one, guys. I'll be back tomorrow morning, and see you in the Telegram group if you need anything. All right, have a good one.